Do you anticipate that this is the trend now, flattening?
Yeah, I certainly see that a curve flattening is the path of least resistance. I actually think that we get the curve inverted by the end of the year. And an inverted curve is obviously not going to be great for financials, but it's also going to reflect the realities of where we are in the business cycle. We have a Fed that's continued to push forward with tightening at a time when the economic data is frankly good but not great, and where the expansion is certainly towards the end of its cycle.
Gina, within the bull case for the banks, there is this confidence that deposit betas are going to remain low, and this won't be a story for 2018. Do you take the other side of that?
I think it will be a story for 2018, probably into the second half of 2018 as competition increases. Amid this flattening yield curve, as rates go higher, the competitive landscape changes a lot, especially if you get an increase in loans. So if we do get the economic growth, a la tax reform, you start to see an increase in loans, the competitive landscape's going to shift a little bit, and it's going to be a different story.
So if you don't have the net interest margin as a one-way trade, Chris, later this year, you need the volume of loans to pick up. Are you seeing that in the numbers we've seen so far?
We're not seeing that in the numbers so far, but that's what we expect. Again, as we were saying before, there is a lag to the tax effect. And we expect that lag, we expect the numbers to improve. We're watching and we're listening to 1Q earnings. We think they're exceptionally important. It's not so much the report, but it's the guidance. What are people doing with the money? And with unemployment at 4%, where are you going to put the money? In all likelihood, you have to do productivity enhancements, and that goes into technology, and that goes into reinvestment. So we expect to see that going forward.